Hi once again. It's Ipta Insights with another video, and today we'll be focusing on order blocks, specifically mitigation blocks and breakup blocks. We'll try to differentiate those, and we'll try to show how we can use them for our analysis and our entries. So, with that being said, let's dive into it. Right. So you've probably seen this from your Discord. I would like to believe if you're watching this video, these annotations were shared on the Discord server. For a mitigation block, I'm just gonna go through the key points. So at point one, which is point one right here, we see price gravitating towards our institutional reference point, which is what any PD array that would provide resistance for price, right? Right here. Whether it's a very shorter block, whether it's a consequent encroachment, whether it's a whatever that you're looking at on the daily or on the 4 hour or whatever time frame that you regard as a high time frame for you, because you can still use the 1 hour time frame as a high time frame if you are an aggressive scalper, right? But nonetheless, yeah, you get to your resistance level right here, which is your PD array, and then you see price trading away from that PD array, and it forms what? A failure swing. What is a failure swing? A failure swing is a swing high that fails to take out that initial swing high. So it's a lower swing high. There's a higher, that's a higher high, lower high. But I'm not talking about that in a sense of making high highs and making high lows and whatever that is being taught in the retail world. So let's just distinguish between those. Yeah, this failure swing indicates that price is heavily bearish. It indicates weakness. This is how we perceive it in as IPTA traders, right? We perceive this as weakness. The market tipping its hand to you, saying that it's pretty much weak. So at B, we see what? A failure swing. A is the retracement into what? Into this leg that was formed after we traded to our PD array for resistance, right? Now it says um price trades from B to C, which is a rally that breaks the swing low at A, and a return to this right here would cause what we call, it's called a buyer's remorse. It's also termed as a buyer's remorse. That's what we made on this annotation. Because why is it a buyer's remorse? Everybody who bought here, everybody who bought on this last down close candle, everyone who bought there will be given a chance by the algorithm to do what? To mitigate their losses, to mitigate their positions. Because if you are buying here and then price trades lower, you're in a loss, right? It comes back up, you get a chance to do what? Close your positions without any further damages, right? You buy here, you're in a loss, comes back here, you close, you didn't incur any losses. So there's what? A buyer's remorse model. That's what it's called. So how can you use that to your advantage? This here, right here, provides what? Another level, another key level of what? Resistance. The same way this PD array provided resistance here, this PD array can provide what? Resistance right there. So there's what a mitigation block looks like. And another way of defining a mitigation block is, let me just go into the chart. All right. So right here, we have what? We have price trading into the step index. I just cherry picked whatever chart that I wanted to use because price is price at the end of the day, right? So price trades into this BC right there. It's a discount BC from this range low to that range high. There's in a discount, right? So it trades into this area for what? For support. So let's assume this our PD array. It's a BC. All right. Once we trade into that area, we need to see what price forming the first swing, and then we need to see a failure swing. We have a failure swing right here. We have the initial swing right there and a failure swing. And look at what price had already done. It already induced what? It induced or engineered what? Trendline liquidity right there. So it was bound to attack that. All right. So what happens? Price makes this low and makes a higher low right there. This last up close candle, which is right here, the last up close candle before the move up right there, is your what? Your mitigation block. You can use the whole candle, including its wicks. You can use the body. It's very much subjective to who you are and what you believe in terms of what works for you. And you can see how it temporarily provided that level of support and failed to take out that swing high. But I just wanted to give you an idea on how a mitigation block would work. You get it provided support right there. You include what the likes of the order block, which is here. There's another BC here, and it gives you as much confidence as you'd be looking for, right? So I think you have an idea on that regard. And like I said, another way that I look at mitigation blocks, when I learned mitigation blocks some years back, a way that I learned mitigation blocks in a way that I got to understand them easily is, what is my mitigation block? A mitigation block is an order block. Let's say it's a bullish order block like this one. Mark it out in time. A bullish order block that's get broken and it turns into a bearish order block. A bullish order block that failed to hold for support will be used to hold for what? For resistance. And you can see price was initially using this for support, and then eventually we break it here. We overshoot it a little, but that's okay, that's understandable, right? But what you just need to take away from this is, look at how price is respecting this level. How key is this level to price? You can see how it gets back here, uses it for resistance, and then we trade away to whatever area. I'm not looking at the analysis right here. I'm just looking at something that would make sense to you all. So there's how you can understand mitigation blocks too. But I'm not really confident with mitigation blocks. They're useful, but not really that much useful to me. So my best order block would be what? Would be a breaker block. All right. What is a breaker block? A breaker block is a slightly different type of a block, type of an order block. When compared to a mitigation block, it's almost the same. The logic is the same in terms of the buyer's remorse and seller's remorse logic that I was explaining at the mitigation block. The only difference is, with a breaker, we see it not making a failure swing. It instead, that's what it trades above the initial swing. So we have a swing high formed right here, and then we form a low, we rally up, take out short-term liquidity, short-term buy-side liquidity right here, and we might be trading into a PDRA, or we trade into a PDRA and then we slam liquidity one more time. That's a breaker block for me. A breaker block has to see what? A high and a higher high. For a mitigation block, it's a high and a lower high, and then we slam lower. Once we break through this intermediate, let's not use intermediate terms now. Once we break through this level A here, as indicated, we are bound to return to this. Use the same logic for mitigation blocks, your buyers and sellers remorse. The buyers who bought here thinking that it was going to rally all the way up there are given a chance to do what? To mitigate their positions here and potentially put in new positions there. Smart money will use breaker blocks to do what? To put in new positions just right there and sell to target this and whatever draw on liquidity level that they have. So you can only use this when you have what? Logic behind it. You need logic, which is what? The draw on liquidity, which gives you your bias, your narrative, and everything, right? So let's get into the chat and look at our breaker block. All right. So right here, ICT gave a very interesting explanation to why he named this type of a block as a breaker block just recently, right? He says the reason why he mentioned, okay, no, I'll get into it. Let me just get into the chat, right? Let me dive into the chat. So we have a liquidity pool here, and in a context of what? Relative equal highs, right? That's retail resistance. There's going to provide what? Buy side liquidity. Buy side liquidity right there. trying to make this video as short as possible, right? So it doesn't take a while. Price does what? Rams through the buy side liquidity right there. And here's the interesting part about, there's our buy side liquidity, right? It's our liquidity pool. So here's the interesting part about our time and price theory when we're trading forex and futures and stocks and everything. Look at what time we're reading this buy side here. It's at 10, right? Somewhere around 10 to 11 and all that time. This is what the London close. And you'd want to see something happening here. We'll get into that in the mentorship. We'll get into some of the basics behind time and price theory on the forex and futures class, time and theory class. I think it will be in the nearby future. All right. So, what's your takeaway from this? The takeaway is we ran through buy side and then we engineer buy side right here. For those who are thinking there's going to be the high of the market, that that's selling right here. That's selling somewhere here, putting their stop loss where on the most recent high. And look at what price does. Price slams through this short-term buy side liquidity right here one more time. We have already taken out buy side liquidity and then we slam through buy side again. We don't need to take out any more liquidity, honestly. So what am I looking for? I'm looking at the last down close candle, which is right here. That's my what? That's my breakup block. Let me extend that to the right so you can see, send it to the right so you can see the essence of a breakup block. It can overshoot it a little. That's fine. Price has that tendency of not making things so obvious to you, right? It has a tendency of not making things so obvious to everybody. So they don't want you to see these things on a plain chart very easily, right? It's only for those who are informed. So look at so we have an opposing liquidity pool right here in context of what? Relative equal loss, that's retail support, sell side liquidity resting right there, sell side liquidity. Where should I put it? Right. Okay. So you can see, right? You can see how this whole breakup block keeps on rejecting price, keeps on rejecting price. We overshoot it a little here. There's very much permissible. It's allowed, right? And then you can see eventually how price does what? Trades lower, takes out our liquidity pool, and that's basically that. And you can see here, we use our breaker, we trade into it, it becomes another point of interest, and then eventually we use it for support and we trade. Look at how price is literally gravitating back to this breaker block over time. There's how the algorithm actually works, right? There's how the algo works. And another breaker block that I see, let me just get rid of this, which is the last example now. So right here we have a law. Look at this. We had a sweep of sell side right there. We formed this law. So I'm just using this to give you a different feel to a breakup block. We form a law, right? After sweeping what? Sell side liquidity. That's fine. That's great. So our opposing liquidity will be where? Will be somewhere here, which is buy side liquidity or market in blue. So you usually do. Right. So what do we have? We have price making a law right here and then makes a high. So I'm paying my attention to that high to see what will happen, right? I'm paying so much attention to that high to see what will happen. And then price trades lower, taking out what? Sell side liquidity. Again, this communicates that this will likely, the last up close candle will likely be the what? The breaker block. So you mark that out in time. You're not focusing on this area, none of it. You mark that in time. Let me just do that. I hope this video is not so long. Try not to make them too long. It's exhausting for you all, not for me. I enjoy doing this. All right, so we have a pool of sell side liquidity, we raid it once, make a high, raid it for the second time. The high, the swing high in between these two recently formed swing lows, that's your breakup block. The last up close candle there, that's your breakup block. It's gonna be used for what? For support. You see, price does what? Trades across it right there, trades across it right there, through it, comes back into it, respects it, and then we trade away, target our liquidity pool right there, and whatever that was on this side, I don't know, because I'm not actually trying to be as technical as possible, but we had that CB right there, which could have been a potential target too, but that would be me cherry picking, right? So there's what you can take away from a breakup block. And a breakup block and a mitigation block, what you would realize is that uh well, there's two elements. When you have a breakup block before a fair value gap or an order block, let's say this is our order block, take note of what I'm saying. You do not want to anticipate price to retrace all the way to this order block and then we buy. That is not going to happen at most times. Why? Because this holds more essence than this order block in terms of what? The PDRA matrix. The PDRA matrix will be taught in the mentorship. We have, it is actually categorized, right, from the strongest PDRA to the least strongest or the least strong PDRA in terms of retracement. The first one for your retracement that is likely to hold price is a mitigation block, and then we have a bearish breaker or a bullish breaker, however you may call it based on your narrative or your bias. And then we have a void, we have fair value gaps, order blocks, and then eventually a rejection block. So I cannot stress that right now, so I'll just have to cut this video right here. I hope you took a few concepts from that, but let me just sum it up with going into the Discord, and then where's that we have this right. Don't focus on what's right here, right? So we have so much here. Want to see something? That's something that I shared, right? Something that we shared right there. Okay, that's what I was looking for. Not you. This right there. Sorry for taking you all through that, but that's our Discord server. All right. So we had what? We had a law digging into what? Into a daily order block. I cannot go through the whole setup. It will be time consuming, right? We have a law, and then we form a lower law. The last up close candle becomes what? Becomes our breaker block. And this last up close candle has been formed on an intermediate term high, and we had a long-term low right there. So you stretch that out in time, you can see how price trades through it and then comes back into it. But we have what? This last two consecutive down close candles. That's your order block. It does not have to come to this order block. It does not need to. But when we have a breaker block plus a fair value gap, that's confluence. It gives you strength or confidence in your setup. You enter right there. When it comes back into your breaker, that's how you use it for entries, right? You enter right there, and then stop loss slightly at the low, or you might, if you are protective in terms of your stop loss, you can put it right here or on the most recent swing low. But that's a story for another day. But you can see how it held price nicely twice. Once here, the second time here. Took out this and kept on rallying higher. So with that being said, that would be that. Let me just close that, and thanks for listening.